Hi, my name is Mohammad Abdul Majid, bearing roll number THI 3057, along with my group members Abbas, Sudhir, and Arvinder. Here we are discussing about accounting for intangibles. So we are going to talk about overview, introduction, rationale, purpose and findings, implication and conclusion. So I'll be discussing about the overview and introduction. Abbas would be talking about purpose and findings of the study. Sudhir would be talking about the implication, and Arvinder would be talking about the conclusion. Now let's talk about the introduction. The topic for the presentation is accounting for intangible. There are two studies that are taken into consideration while making this report. Our presentation would highlight on those two factors, why those studies were taken into consideration, the outcomes, general article study of the study purpose of the study, and research questions and similarities and differences of both the studies. Now let's talk about intangible assets. What are intangible assets? Intangible assets are something which are not physical, which cannot be touched. Something like copyrights, trademarks, goodwill, customers, and human capital, softwares, and intellectual knowledge. These are these are the major source of companies, a firm's revaluation or firm's performance. And the treatment of intangible and tangible assets are very different. These are not as simple as what we do for tangible assets in companies' performance. As we discussed the introduction and overview in the previous segment, and now let's talk about the rationale for selecting these articles for intangible assets. Now let's talk about the value, relevance, and reliability of intangible assets. This study is based on the method that were adopted before and after international financial reporting services. This report also talks about determining the reliability of the accounting method that were used for intangible assets. And this another reason for selecting these articles was its uniqueness for in determining whether the standard have been positive relationship with the relevance and reliability of international financial reporting services. Another rationale for intangible assets and accounting for intangible assets. These articles include the recommendation for modifying the articles which are already used for intangible assets. This expansion should include the classification of investments that are made on intangible assets. The importance of this research is highlighting the point of understanding the differences in reporting the tangible assets and intangible assets. We already know about how complex is recording the transaction of intangible assets and how simple the recording of or accounting treatment of tangible assets are. Thank you for watching the video. Now my turn is done. Other topics will be covered by my group members. Thank you so much. Have a lovely day ahead. Thanks.
Hi, very good evening. My name is Mohammad Abbas, and I'm presenting the purpose and findings of the assignment. My ID is THI 3056. That's my student ID. I start with the purpose. So the purpose for the assignment, there were 4 questions, as you can see, given: tangible assets associated with market value, effects of value, reliability and relevance, improvements through FIRS, and what was the effects of IFIRS on relevance. So these 4 topics, the answer to the above questions were helpful in achieving the purpose of analyzing the value, relevance, and the association of this study with reliability and without using the international standards. That was the first part. And the second purpose, as you can see, there was a second research done, but there was 2 different research. The first is J and U, and the second was what Weight and Abernethy 2008. So I can see that on the second one it says accounting for intangible investments. They were categorized: the value of intangible, preference in value chain, importance of classification through traditional principle, international standards, and prospect classification. And last but not the least, I'll do the findings. There were the 2 different findings, as I said, 2 different research. The first one, J and Liu 2014, and the second was Weight and Abernethy 2008. So there was 3 main findings. The first one was the existence of assets. The second one was the company's authority, and the last but not the least, the profits from that property. And I'll go for another findings. There were three more similarities in these findings. The first one is the evidence in context of Australia firms. The second was expanding and improving the existing standards. And last but not the least, the emphasis on using the international standards. So I'll just quickly tell you one important thing. The first study mainly considered the reliability of the accounting information, while the second discussed categorization of information. And that's it from my part. I thank you so much, and my friend will do the implications and conclusions. Thank you so much.
Myself Sudhir, and my ID is AZZ3638. I would like to talk about the implications of accounting for intangibles. Intangible assets are mostly effective on accountants, accounting regulators, and external users. Firstly, for accountants, it is an accurate accounting practice by including intangible costs. It helps in prevention of errors. Intangible assets have a distinguished feature like physical assets and non-physical assets. The use of IFRS will ensure accurate financial reporting on basis of both relevance and reliability. In case of accounting regulators, they provide an effective and reliable information. The value of intangibles are basically used as business results. It provides a safety for the shareholders and helps the financial standards of the firms by reviewing and revising the data. When it comes to the external users, it helps the external auditors by providing them distinguished intangibles and give them exact source of resources, and helps to avoid any sort of conflicts in this firm. Thank you.
Hi, my name is Arvinder Singh and my student ID is DY30490. Today I'm talking about the conclusion of intangible assets, and the basic conclusion about intangible asset is difficult to identify with the accuracy. So as we discuss about the different studies focused on the distinct feature of the intangible assets and expenditure. So the finding from the studies are the main finding from the studies are reduce the errors over and underestimation of the cost associated with the intangible assets, and to provide the shareholders and investors with the accurate information for the company and for the shareholders, and that will be helpful about the financial reporting towards the end of the year. And I think I've covered enough for the conclusion of intangible assets. Thank you.